All right, hey guys, back with a quick video update here on the order flow buy-sell momentum indicator. Now, this is a cornerstone of the graphical order flow package, right? So if you're if you're not familiar with that, well, here we've got it right here in the very first sentence here. If you wanted to look at the entire order flow package put together, again, graphical order flow here. So there's no footprint chart involved, but this is a way, what we're trying to do here is replicate and give you as much information as we can in a candlestick chart, where we're pulling some of that same information that you can get from a footprint chart onto a candlestick chart. And that's the reason for this video, because we have a number of people that have taken to using this indicator as part of their own template, their own combination of indicators, and they're kind of taking that same benefit that it was designed for, but then again putting it in the context of whatever the momentum pieces that they like, or the volume pieces, or whatever it may be. So thus we've had enough requests for a little bit more detail on this indicator by itself. Now, as is the case with all of our indicators, all the package, everything, the web page itself really serves as an online manual. So there's all of the features here, all of the detail. Well, of course there's text and there's images here, but people are drawn to videos, and the video walkthrough I think is probably the best way to really get some insight into it. But if you needed to refer back to it after watching this is a good place to come and say, what was that unfinished business thing again? How did that delta divergence work? So you don't have to go back through a video. But here I just kind of walking you through this here to go through some of the key features. Okay, so with that said, now I'm going to bring this down here, and over here I've got side by side here. So here we're just looking at a 2-minute of the micro ES. Footprint on the right, buy-sell momentum applied here on the left. So let me open this up here. We'll come back to the footprint because I'm going to show you a few things that you may or may not be familiar with. All right, so I'm recording this on Saturday the 28th, as I always do. I just use the last day or two of data, right? We don't need to cherry pick anything here. This will work just fine. Now, there's a couple of things that you're going to see here right off the bat. Well, you see these red stripes, right? So this is my color combination that I use when I'm using this outside of the graphical order flow, or actually even within the graphical order flow, which I do use a lot. I've just pumped up some of the colors, right, to make them stand out so you could see a little bit better. I wouldn't necessarily, these are stacked imbalances, I wouldn't necessarily have them that bright here, but I wanted you to see them, so when we're looking back and forth between the footprint chart and the candlestick chart, it really stands out so you understand what we're looking at here. So this is just the RTH, this is Fridays, so gap up here, and then we start to come down. Okay, so I think the best way to do this is let's start with the parameters, and we'll go through them one at a time, and then how they relate to what you're seeing on the chart. So let me open this up here, so stand by for it. Okay, so here I've just opened up the indicator so we can look at the parameters. So starting at the very top. Well, this would be likely what you'd want to trade with here. We do give you the option of up, down, tick, right? So if you were, there are certain countries here where you can't get the bid-ask, right? So we're giving you that flexibility, but the vast majority of you are just going to use bid-ask. We give you the capability to group the ticks if you wanted to. So maybe if you were looking at a 5-minute, you wouldn't necessarily want, well, again, it's personal preference. You might want to group 1, 2, or 3 ticks, right? So avoid some of the clustering here. But so that's an option for you. If you're on a 2-minute or below, that's likely not something you're going to worry about. Extreme delta, we're using 600 here. Many of these are the defaults. What I've changed primarily are the colors, right, and then amped up a few things so that they really stand out for you. Okay, so this is an area where we get a lot of questions about this. So what we're doing here under the momentum feature of the buy-sell momentum is this is really a proxy for delta. So what we're doing here, this is the speed of the volume. Not the difference between market order buys and sells, right, as you would with delta. It's just about the speed of the delta. So as the candle is forming, these being 2-minute candles, we're focused in here on the first 20 seconds of the forming of that candle. How fast is the volume coming in? Now, that's not necessarily a trigger to take a trade, because things can change. We got 2 minutes here, right? Things can change within that 2-minute window, but it can be. So for something, well, here we can just use this as an example. We're coming down here, and then you're getting a reversal here. It might be to your liking to see that, if you were going to take a long here for whatever reason, that as the candle was shaping, that the speed of the volume was noticeable in the first few, well, the first 20 seconds, right? Change it to 10, 15, 5, 30, 60. It would change whatever you like. And it doesn't necessarily have to be seconds, right? You might be looking at this on a daily chart, and you want to know, within the first, I don't know, 5 minutes, right? It's just, these are just options for you here. Most people applying this will be in a day trading or swing trading kind of a context here. So the short burst of speed is what we're tracking here. We're giving you a couple of different ways to view that momentum. You might play around with these here. Of course, I've looked at all of them. I find that for that speed, which we'll break down in a second here, but inside the candle with these little triangles here, probably the easiest way to glean that information from within the candle. But you play around with it here. You can do it as diamonds, oh God, what we got? Arrows to the left or right of the candle, diamonds above, below here. You can play around with it, whatever you think. Again, having done that myself, I think you'll find that triangle inside the candle is the best way to get that representation. And then now we get into how we're measuring that speed. This is the default. It'll come, I think, 14 period. You change it to whatever you like, but that's a good starting point. And so essentially what we're tracking here is over the last 14 bars, if we were to track that speed and then look at 1, 2, or 3 standard deviations. So if we get up to 3 standard deviations, you essentially have got 98% of the, if we tracked over that 14 periods, if we're at 3 standard deviations, that's faster than 98% of the last 14 bars, right? And so I mean, one being 68%, right? So this is just typical standard deviations here, but it's a good proxy for delta, as in, okay, how fast is it coming, and how fast is it coming relative to the prior bars? Now you might change that to maybe you want 5 bars. You get a slightly bigger sample set when you're going with something like a 14. So when it's accelerating, it's perhaps a bit more meaningful than 2 standard deviations from the last 3 bars or 5 bars, right? But again, it's play around with it to whatever suits your needs best. That's what we're doing here. And then how you want to see these, I think the default here, these are done in colors. But you can change them. I find that white, since I'm just using a standard green-red here, that the white is perfectly adequate here. So if I were to open these up a little bit, they really stand out. Again, it's not necessarily something you would use to make a trading decision exclusively, but if you were looking for a reversal, or that's the kind of thing you wouldn't mind seeing if you were looking for a reversal here and the speed started to accelerate on the downside, that probably wouldn't discourage you. Okay, so we've got all of that here. Again, play around with these to whatever you prefer. You don't have to keep 1, 2, or 3. You might just say, okay, I only want to see it when it's 3 standard deviations on the last 10 bars, right? A little experimentation is certainly warranted there, but this is kind of a good starting point, right, if we say it that way. Now, okay, candle outline. What we're looking at here, and you see this, I've pumped up the colors here to make it really stand out. So what we're trying to identify here is where the bulk of the volume is over the range of the bar. So this is well, you can think of it as a third. So here, let me bring this down here. So, let me get a good example. Well, these are decent examples here. As we're coming down here, let's see, how can I don't think these will work on that. Well, yeah, I guess we can do it that way. Okay, so what that means is that if I were to do it, shrink it down here. So as the market is coming down here, we have the potential for trap sellers here because the bulk of the selling volume was in the bottom third of that candle. You see, we reverse here because we've also got the outline here on the next candle. So you might say, hey, the bulk of the buying here is in the top third of that candle. So the premise being at this low, we have a candidate here for a situation where we have trapped sellers here as the market is. And that's indeed what we get, right? So as this is the first test of the IB low, up we go first. Right, not to be digressing into that, but you'll note here this is interesting where that's happening. So here again, the premise being if the bulk of the volume of the buying within that candle is at the top third of the bar, the assumption is it might continue. Here let's look at it over here so you can kind of see what I'm talking about. Oh, I might have to. I'll pop this up so I can get, here we go. Okay, so here are those 2 candles right here. So sometimes it's a little bit hard to see it by your eye, but this one's not going to, I can't draw on these, but you can see the bulk of that, all of this volume is in the lower third of this candle. Well, here, this is a pretty good example. Here you can see it's pretty thin up here, pretty heavy down here, and then you get the opposite right here. The bulk of the volume of within the bid-ask at the candle, we can see is in the top third relative to the bottom third. And we've got 0 prints in the middle of it here, and then again, it's very obvious here. Very little bit of volume here, but then much more substantial size here. Note these are also micros as well, so plenty of volume in the micros. So that would be the idea here. All these guys down here are trapped. Now they're coming back the other direction. They got to cover, and often that's what will give the reversal there some legs, as you have trapped traders that are covering. Oh, here, let me get this one down here, and we'll come back over to this side. Okay, so that's what we're doing there. So it's speed within the X period of time that you've set relative to the X period of candles or bars that you've set. Again, kind of a proxy for delta. And then as we come up here, now you see there's a couple of the markers that you'll see on the candles here that are worth noting. So these are things that you would typically see on a footprint chart. We're bringing them over here to a candlestick chart for those that, for whatever reason, they aren't drawn to a candlestick or to a footprint, or they don't find any value in it. Whatever the reason may be, they don't want to do this here. So we're trying to bring as much of this information over to a candlestick chart as we possibly can. So one of the things that you'll see here are these little dashes. Well, these dashes, here's a good example. These are exhaustion prints. So for example, if you were up here at this high, and you were trading the reversal here at the IB high, and the market starts to come down the other direction, well, there are going to be buyers in there, right? Well, almost always will be both sides of the market there. But what you want to see, so in this case, if you were shorting down here, you want to see that although there's buying within that candle, that the buyers are exhausted up here. So, I mean, here's a couple where you see, okay, there's very little volume on the buy side. So pardon me, in this case, we're coming down here. So on the buy side, so you want to see that exhaustion here. There's no more buyers here. They're exhausted. Same thing down here, right? Well, let's see. Let's go over here. Oh, here. Okay, here's a good one. There was some selling in here, but they've exhausted here, so buyers are taking over here. So, where's that one? Is right here. If you're long, that's what you want. You want to see a trail of exhaustion prints at the lows of the bars, right? Because well, here, look at the wick. Even though we had sellers here at the low of the candle, they're exhausted, so we start coming back the other direction. If you're short up here, you want to see those exhaustion prints at the top of the candles. If you're going short, right? Same kind of thing here, right? We don't have them here now. If you were playing this as a retracement swing, retrace, and then we're heading down, you want to see that exhaustion because there were buyers there at the top of the candle. They're out of gas, right? And then they roll it over. Then we get, here's a stacked imbalance, right? Which is probably the next thing to go to. Okay, so if it's, what are we at there? That's 1305. Let's pull that up here so we can just, for reference, it takes a little bit longer here because we have fatter candles. Okay, 1305. Second. Here we go. Okay. So here's what a stacked imbalance looks like in a footprint chart. And again, assuming that you're not familiar with this, you haven't seen it before. Well, there's a dramatic imbalance here between stacked imbalance, but you got at three price points in a row, right? So stacked being all of those prints here are different tick levels here. So we have very little on the other side. So it's an imbalance. Well, here we've got 0 prints, right, as well. So this is, I mean, sellers are just overwhelming here. And then, do we get, well, we don't. I remember for stacked imbalance, they've got to be right on top of each other. Let's get up a little bit higher here. I don't see another one. Here's a buy imbalance, right? So you see the imbalance between the two sides here, and they're stacked on top of each other, right? So that's how we have it set. And then you see the exhaustion prints as well. So this if you were long here, this would be just the kind of sequence that you'd want to see. Well, note here we've got very aggressive delta. In this case here, that's the advantage of a footprint here. I can track the delta. So I've got strong delta. I've got a stacked imbalance, and then I've got an exhaustion print. You see the 0 down here. So we've got all of the ingredients for this move are present Well, you can come down here, you see a very long rejection wick as we're coming back up here. Now we get exhaustion at the low, then a stacked imbalance, then we've got POCs right next to each other. We'll get to that in a second as we look at the POCs, and then POCs are climbing, and then we coming right back down. Okay, let's get off the footprint because that's really not what we're about, but you need to understand what these are showing you so they make more sense to so you have some context, right? So here's that stacked imbalance coming down. Again, I pumped up the colors here to make these really stand out. Here was the stacked imbalance on the buy side. Here are the exhaustion prints, stacked imbalance coming down, stacked imbalance at the low, right? So here, this is actually a pretty good example here. If you were thinking of, well, now we're getting into the end of the day, but if it wasn't necessarily, hey, what does that mean? What you have here, well, more than likely, but you don't, of course, you don't know until you see the market turn around. But as we're putting in this low, you've got trapped sellers down here, right? So they were coming aggressively. Now there's a bunch of them here pushing, rejection wick, right? And then we get some divergence here. That's the delta divergence. We'll get to that in a second. Now we're coming back the other direction. Here's why you might want to keep the stacked imbalances, coming across the chart, because as we tap this, we know we've got aggressive selling here. Now we get through it. Come back down. All right, same thing here. Oh, does that get tested? No, we don't. So typically, I will run them across the chart until they're tested, right, or broken. Here would be an example. Here's tested, broken, tested, broken. All right, and then there's the end of the day. So that's I think hopefully there's value here. Now let's go ahead and use these. Here, this is we'll go over to the buy sell momentum. This is delta divergence down here. So as we look at that, let me go back inside. Okay, just open it up again. Here's the delta divergence and the POCs, right? So we've just looked at excessive color. Now here's the bar POCs, so that little yellow dash, right? Color choice, up to you. It's kind of a good idea to keep track of where the bulk of the volume is. Where's the at what price point is the point of control, right? That's what we're tracking here. So here we're just doing a little dash over on the footprint chart. We're highlighting that bid-ask row. Now you do have some choices here, and now you can set this to candle, new high, new low of candle. But I think what you'll find here, session new high low rather than candle new high low. If you do candle, you're going to have a gazillion of these, right? Well. Technical term. You might find that it's too many, right? There's divergence, it's losing its significance. But if it's at the new session high or low relative to the candle, you're putting that delta in there, that can be more meaningful. Here we see so it would have to have been the session low. You can see it happens to be the session low where we have an up candle with delta divergence. So that's a choice for you. Here's the exhaustion prints. We talked about an unfinished auction, right? So here each one of these. So if the market's going up, you'd like to see those exhaustion prints at the low. The imbalances here, right? It's a 3 to 1. Got stacked imbalances, here they are, right? I extend them until tested or broken, right? You can do it number of bars until broken or until tested. I prefer until tested because I know the market often will come back and there's likely to be support or resistance there as a function of the fact that there was aggressive buying or selling there, so much so that it left a stacked imbalance. Color choices, and again, I've got these pumped up very high, right? I might normally have that at 25, 30, right? Because I don't need them that bright. But just to make the point here so you can see them. Same thing with the on the buy side, the buy imbalance. Unfinished business, again, I keep them on. Here's an unfinished auction here, unfinished business at the low, right? So often the market will come back and tidy that up and clean that auction off. It just means that we don't have a zero at the last level of the candle, so we have an unfinished auction. Market will often come back to tidy that up. You can do same thing here. It just as all of these, you can do bars until broken or still tested. I prefer until tested on these. Now Pikachu, I don't use these. Some might find some value there. I find there's too many of them. There's where you'd have one delta extreme down and then a delta extreme up. It's okay, right? Do a little sampling if you like them. I choose not to use them, but it's just an option for you. Okay, I think that covers all of the choices that are relative to the footprint chart as we look here. Oh yeah, I think I've got everybody covered here. Here, this being exhaustion print, Well, here's some good examples. So here's unfinished auction, right? So we don't have a 0. Note here we have a 0, 0, 0, 0, 0. These are unfinished, 0, 0, 0, 0. Here's unfinished, 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 right? So that's an incomplete auction. So market will have a tendency, I don't have it highlighted here. The market will have a tendency to come back and clean up, tidy that up, right? 0, 0, 0, 0, 0, 0, 0, 0, unfinished auction right here. Right, so the market may come back. Well, here it doesn't take long before it tidies that up. Then, oh, there's more things in here, but that's for another video. But just so you see, we're giving you as much of that information as we can here in a candlestick, because many people, that's what they're comfortable with, what they know. But they'd like to have that information. I'd like to know, right? If you don't have it, you just got a candle coming down. Well, you got a big gap. You got a fair value gap here. It's clear evidence of strong selling, but I kind of like knowing that there was an imbalance in there, so I know how aggressive the selling was here. And then unfinished. Here's an exhaustion print as we're coming back down. Now, sometimes you'll see these when we're in rotation. You'll get that exhaustion here. This is essentially untradeable, right? That's the kind of stuff you want to avoid, right? There's no sense of trend. Here you get a very short-lived, but it's a good example here. So note where the POCs are. So here, we're down here at the low here on the wick of this candle, but all the volume here. Now would look quite different if we're looking at a candlestick, but we just see this hammer, or this, well, it's a pin bar really. So we've got here's the POC, 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 right? So look at the difference here. The POC's down here at the low as we go up, POC's up here as we come back down. So then POC, right, we're coming down, 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 right? We get an exhaustion print here. Here's big, right? So we know the bulk of the volume was in the top third of that candle. Coming back down, there's the exhaustion print. So this is, that was a pretty harsh sell-off here on Friday. On Friday the 27th, right? So then again, right here's stacked and balanced. So I think you covered it. So here you see. So this was a big push up. Note this was the speed of the the speed of the buyers here in the first 20 seconds of that candle was noticeable. But we leave this big wick, big rejection wick. Here's the POC up here, trap traders. Right. So here, same thing. We just went over this right here. So at that moment in time, that was the low session low with an up candle, delta divergence, right? At a stacked and balanced. So here's trapped shorts. Up, 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 come back down here. That's a good example here because we've got the speed of the volume. It initially it was coming in aggressively to the upside, but we have a down candle, right? So it's a 2-minute candle, and we're just focused on the first 20 seconds. So again, it's not enough by itself to say, oh, I've got the speed is increasing in the first 20 seconds of this candle, so I want to be a buyer. Not necessarily. Right, always confluence, right, will dictate the better trading decisions. All right, I think we've covered all of that. Okay, so if you are interested in looking at it in the full context of the graphical order flow, well then of course you can come over here, and as we just looked earlier here, you've got these videos that on this page. Well, so here you see it, fully put together, and then we added a few more components to this. As you see here, everything now that's included in it. And here's a little bit more information about what's in it. Again, would be specific to whether or not you wanted to go towards this kind of graphical order flow, as we call it, right? Again, as much as we can give you without going into a candlestick chart, or pardon me, into a footprint chart. All right, so there you go. You got all of that. Should give you enough to get started. As with all of our indicators, everything's available for a 7-day trial. So you'll get 7 calendar days, 5 trading days. So you got plenty of time to test these out and see if it would fit in and be a tool that will be useful to you. All right, so there you go. All right, that'll do it for me. See you on the next one.